Treasury yields remain range-bound as we start the week out, holding that 10-year note tight between 170 and 180, and actually settling today right at the midpoint, right around 175. It's been like that for the last several sessions over the last 5 days. We've been unable to really break out, and why not? We've been waiting for some kind of resolution, whether it be with China, whether it be something in Washington. The economic data has been good and bad. It's been kind of a back and forth, but ultimately the Treasury market is not following suit with what we're seeing in the equity markets, which is continuing to see optimism reign, bullish momentum push equities to new and newer all-time highs. And the bond market just kind of sits there and wait. We saw this trade earlier in the year. It was one right before we saw yields dive lower. So I think at this point, the cautiously optimistic bond market is waiting for confirmation that the equity markets, I think, are already pricing in. So at this point, we hold range bound, not really showing a whole lot of bias either way. Right now, the market could move in higher or lower. Based on what we get. But again, no confirmation, no movement in the Treasury market. And if you look at volatility, we are still holding near those lows that we've been talking about for the last several weeks. Right now, we aren't seeing any continuation lower. We aren't seeing any bounces higher. Once in a while, we get a little nudge up. But ultimately, again, the bond market is waiting for something to happen, waiting for an event. And at this point, a lot of the defense that we used to see being bought in the bond market, we're not. We're seeing a lot of that defense go right back into equities. So it's kind of what we call the Texas hedge. And at this point, equities are continuing to set the tone. Again, let's not forget the bond market hasn't really moved a whole lot, and it continues to be range bound, which tells me that the lower volatility levels just suggest that it's more of the same until we get some confirmation. So no confirmation, no real movement in volatility, no real movement in yields. Right now, this week, we do have something. We have a holiday shortened week ahead of a very big first 2 weeks of December, but we do have some auctions. We had a 2-year auction today, which went very well. Likewise, we have a 5- and 7-year to come. I think with all that's happening in the short end and the Fed assistance that we're seeing there, these auctions could be very critical. And if you look at there's lack of demand for those auctions, I think, or if there isn't any demand for those auctions, it could tell you something. But we did see decent demand for today's 2-year. I look for similar, maybe slightly lower demand in the 5- and 7-year as we end out the week, and then it will be a holiday shortened week. In that first 2 weeks of December, we get a lot of data, including employment. We have FOMC, we've got the UK elections, just to name a few. So a lot happening in the weeks ahead. This week should be rather quiet, again, unless we get some confirmation out of China, which right now doesn't look like we'll get this week, but likely we'll get it closer towards the end of the year.